and it's just shocking. Okay, it's the inventory level of housing, the housing inventory level. And we are starting the new year with historically low interest rates. In fact, on a per capita basis, the lowest they've ever been, ever, since they've been keeping track of this stuff, which, by the way, don't ask me when that is because I don't know the exact date, but I would guess that it was in the mid 60s that they really started tracking this stuff pretty well. Okay, because that's when a lot of these statistics that we look at came about, mid to 60s to early 70s. And just to give you a comparison, what most experts will tell us is that to have a market that is in equilibrium, we should have about 1.5 million homes for sale at any given time. 1.5 million. Currently, we have less than 300,000. You see where my mouse is on the screen, right? That's the current inventory level right down here, 293,000 about as of about a week and a half ago. And so think about it. For the real estate market to crash, if you view it on a supply versus demand perspective, that's the most fundamental basic rule of economics, supply and demand, obviously. Inventory to just get to normality, not to have a glut, not to have an extreme, crazy, bad market, right? Just to be at homeostasis, equilibrium. Inventory would have to increase by 500%. Just think about that for a moment. When you start to see inventory levels double and triple, maybe that trend looks pretty disconcerting, and that's when we should be concerned. But right now, inventory is incredibly low. And if you'd like to know more about this, this is from Altos Research. And I interviewed the founder of Altos Research on my show just a couple of weeks ago. So that's on the YouTube channel and my Creating Wealth podcast as well. But it's like this, if you went into a grocery store and the shelves only had 1/5 the typical inventory of goods that they usually have, that's the housing market right now. It's got only 1/5 of the inventory it should have to be a normal, fully stocked market in equilibrium. So we went over that. And then, of course, there's another chart on the inventory. And to make matters worse in terms of scarce inventory and more upward pressure on prices, they just increased the loan limits for conventional loans. They increased those by 18%. Now, typically on an annual basis, you'll see these loan limits increase by about 7%. But they figured, hey, somehow the experts that run the world, that run our centrally planned economy, figured, hey, there's not enough housing demand. Let's create more. Let's just increase the conventional loan limits by 18%, more than double what we usually do, because we want to just increase more demand, right? And then they took the FHA loan limits and increased that over 15%, depending on where you're located. It's like throwing gasoline on a fire. That's exactly what they're doing. When what they should be doing, what the government and all of these elites that are running our centrally planned economy should be doing, is they should be focusing on ways to create more housing inventory, to make the shortage go away, to help developers and suppliers of new homes build more houses. They should incentivize them, give them more tax incentives, give them more grants, give them more whatever. And they should really pressure local governments to ease up on zoning laws and maybe allow home builders to ease up on all the requirements. Do we really need these low E windows in every house? Do we really need this many smoke detectors and this many fire sprinklers and, all of this good stuff, right? It's all good. It makes a house safer. It makes it more energy efficient. But what seems to be happening is this huge dichotomy of where by all of these regulations, they're literally forcing the cost of construction to just skyrocket. And they're making it like a have and have not game where the have nots are forced to live in their car or live in the street and be homeless or live in basically the US version of shanty towns. And the smaller number of people that can afford a home, they just see the price skyrocketing. So, this is the government in their infinite wisdom. Homeowner equity last year increased on average by $57,000. Now, overall in the aggregate, that means 31% increase, or over 3 trillion with a T, trillion dollars in increased home equity last year. Now, if the market changes and reverses course, certainly we could see some of that evaporate. But look how much would have to evaporate. And also, I should tell you this, 40% of homeowners in the country have no mortgage. Their house is free and clear. Almost half the market, half of the single-family homes in the country almost are mortgage free. So if you're looking for a huge correction or a huge crash in the housing market, don't hold your breath, because this is the kind of stuff we're looking at now, and the home builders are way behind. And I also want to just clarify something else, that when you hear people talk about these statistics, they're always talking about the aggregate, the overall numbers. They're not talking about the acute. And all of the stuff I just shared is a lot worse in the entry-level housing segment. In starter homes, the inventory is dramatically lower, dramatically worse. The housing shortage is dramatically worse, and the builders aren't solving that problem at all, because there's just no profit in building starter homes. So if the government wanted to solve the housing problem and they wanted to do something right, they would incentivize people to build starter homes, right? They would incentivize these developers to do that. And they're just not doing it in any meaningful way. Yes, there's this thing and that thing. I know there's a thing here and there, right? The opportunity zones, blah, blah, blah. But the fact is, the code restrictions are so insane that the builders just, all of those opportunity zone areas are just going to gentrify, and they're going to just kick people out, basically, as people will have to migrate out as the areas get so expensive, because all of the new housing stock, is just much more expensive. They can build $500,000 homes, $700,000 homes, $900,000 homes. Builders can make a profit building those. They can't make a profit building $200,000 homes, and God forbid, $100,000 or $120,000 homes. They're just not being built, period. I mean, yes, there's a couple here and there, but in the overall scheme of things, it's a statistical anomaly. It's a nothing burger. It's just not happening. And so the housing shortage in the entry-level segment, which is what we like as landlords, as investors, that's the stuff we like to invest in, the entry-level segment. And so the upward pressure on prices as the years go by in that segment is going to be just dramatically pronounced, because there's simply nothing coming in to replace that low-cost inventory.